Hello and welcome to another Smaulgld live stream. It is already Thursday, the 9th of May 2019. Tonight's topic: China and U.S. trade war comes to a head. We're going to have an open discussion later on in the program because this evening the Chinese and the Americans are supposed to meet, and there is a deadline at midnight to impose additional tariffs of up to 25% on Chinese goods. So not quite sure how that's all going to come out, but we've got also some crypto stories, some gold stories, and also the latest on William Barr and the vote on him, at least in the Judiciary Committee, to hold him in contempt. All right, let's take a look at the gold and silver prices today. Now, today, the market was down on this issue that there might be tariffs imposed and it could collapse the markets. And the markets, again, were down earlier in the day, 400 or 500 points, at least the Dow Jones. But the Dow Jones ended up on some chatter that maybe they'll reach some type of deal. Dow was down 138 points only. It's down 0.5%, although it is down below 26,000 to 25,828. Tomorrow is when you'll see either the impact of a no deal or the tariffs going in, and that's when we'll start to see later tonight when the futures kick in where we are. NASDAQ down 0.41%, S&P 500 down 0.3%. Not much of a move in the equities markets. They was all heading upwards into the close after falling earlier in the day. Now, you would think that gold and silver would catch some type of a bid on this turmoil, on this economic uncertainty. Gold did a little bit. It's up about $3 or $4, but only to $12.83. Silver fell about 8 cents to $14.73. And of course, the unsustainable gold-silver ratio went ever higher. Now, cryptocurrencies, something very strange is happening in the crypto space. It is Bitcoin and Bitcoin alone that is making moves higher. Bitcoin is now nearly 60% of the overall market cap of all those cryptocurrencies. Bitcoin topping over 6,000. At the current moment, it's at 6,175. Ethereum flat at 170. XRP below 30 cents at 29 cents. Bcash flat at 286. Litecoin flat at 74 and a quarter. EOS flat at 486. You can see what's happening here. Bitcoin is leading the pack here, and I suspect this has a lot to do with upcoming launches of Bitcoin products. Now, these are not crypto products. We know that Bakkt is focused first on Bitcoin. We know Fidelity is focused first on offering Bitcoin. And we know there's a number of Bitcoin ETFs pending. So I don't know directly or indirectly if any of those three have anything to do with it. But we're not seeing the movement in the other cryptocurrencies. That's somewhat how it should be. Now, Bitcoin is the largest and has had the longest history, the most adherence, the most nodes. And last time we had the crypto run-up, the altcoins caught fire, again, on the basis of the run-up in Bitcoin. And in many instances, they outperformed Bitcoin because they're coming from very small market caps. All right, now let's take a look at some of the stories we have before we get into what's going on with China. So, cryptocurrencies have been very interesting of late. Ties into my thesis that Wall Street is clearly, in my mind, preparing for some type of launch of cryptocurrencies, whether it's going to be a bubble or not. I think it actually will lead to it. I think it's the next bubble. You had the .com bubble, then you had the real estate bubble, then you had the everything bubble. It looks like for the economies to move, or the U.S. economy to go without some type of serious depression or recession, they like to just reinflate another aspect of the economy. And I think at this time it's going to be cryptocurrencies. All right, what do we got now? The big news of the week was Binance. Now, Binance was hacked. Binance is the largest crypto exchange. Lost about 7,000 Bitcoins, worth about $40 million. Not a big deal, but it highlights the way cryptocurrency exchanges work is they put about 1-2% of their cryptocurrencies in hot wallets that are available for their customers to trade, and then they keep the rest in cold storage. Now, in this case, they did steal the 7,000 Bitcoin And Binance has a system where they keep their, instead of having traditional insurance like Coinbase has, they have a thing called SAFU. That's not STFU. That's Safe Secure Asset Fund for Users. And essentially what they do is they mirror, I believe, the amount of Bitcoin that they have in the hot wallets in cold storage. So if they lose them, they've got a reserve. And in this case, the Binance CEO said that they will not have to take haircuts, because sometimes that's what happens in a crypto exchange. Loses a certain amount of coins. If they can't cover it, they pro rata take from the others. It's similar to a bank. I mean, it's the same type of thing. If they get hit, they get hit. But in this case, they had the insurance and that they had a decent amount of crypto and cold storage that they're not going to have to take away from the holders of people who have their Bitcoin on Binance. Now, a lot of people, the naysayers, will say, well, this is why it shows how Bitcoin is insecure. No, it doesn't show anything about how Bitcoin is insecure any more than if a gold vault is broken into. It doesn't mean gold is insecure. It just means the manner of custody is insecure. If a bank gets robbed, it doesn't mean that the cash is insecure. It means the bank isn't holding its cash properly and is subject to be stolen. Again, anything of value is insecure if you view it that way, because it can be stolen. Art is insecure. Nothing about the art itself, but someone can come and take your art. If you have one of those famous paintings that, like we saw a couple of weeks back in Boston, they come in and they steal your painting. It doesn't mean the art is insecure. It's the manner of holding on to the art that's insecure. But of course, that's what people are saying. It's the same when they say there's a lot of frauds. Warren Buffett involved in Bitcoin. Yeah, and there's a lot of frauds, as we saw, involved in banks and Wells Fargo and even Ketchup with Heinz. There's frauds involved and there's thefts involved whenever there is something of value. So this is, to me, has nothing to do with Bitcoin. It has to do with the manner of storing Bitcoin. And other people made the same point. Here's the guy, Gabor Gorbaks. He is the person who is in charge of getting the Van Eck ETF past the SEC. Maybe he'll be successful this year, maybe he won't. But he basically said, don't panic. Only hot wallets impacted approximately 7,000 Bitcoin, less than 2% of total holdings. Deposit withdrawals offline. It's not a good thing, but it has nothing to do with Bitcoin. It has to do with the custodial. And the real interesting thing, though, is when it's just like FDIC, there's never enough insurance to cover all those deposits. There just isn't. And so they have to merge with companies, or maybe they'll have to give haircuts to depositors if there indeed are widespread bank failures. So there's nothing that's really, when you have big, wide-scale amounts of value, it's hard to insure all of those. But what's interesting, what the exchanges have done, the larger ones, is they put up a small percentage of their coins available for trade in the hot wallets, and those are the ones they deem at risk. So you can get insurance policies written on those, or you can do what Binance does, is just keep an equivalent amount or a certain amount of, this is what an ETF would have to do as well, I suppose, a certain amount of the Bitcoin in cold storage. Now, what they never talk about is, what if the cold storage gets raided? Well, that could be a big deal. But they don't seem to, I don't think they can insure against that, and they don't really ever talk about that. They only talk about the insurance on what's in the hot wallets. And that is the one that's most likely to be stolen, but it's possible what could happen, just like happened with, there was one exchange guy owned an exchange. He died, and he didn't leave the keys, and supposedly that cryptocurrency is gone. But we see that Coinbase has insurance. There's Coinbase. Also, these stable coins are also, the JP Morgan coin will be backed by deposits at JP Morgan. Coinbase has a stable coin. Tether is a stable coin, but that one people worry about whether it's backed or not. But Gemini coin, Paxos stable coin, those are all audited FDIC backed stable coins backed by US dollars. All right, so if there's anything else in the Binance story we need to talk about, and it's interesting, the price was about 5,800 when the Binance thing happened. It went down to 5,500. I guess it was just bad news in general, and right now it's at about 6,200. So it clearly did not have any real impact or lasting impact on the price. And with credit also to the CEO, who immediately came out and said, yeah, we've got enough BTC to cover, no one's going to be harmed. But he did talk about this odd arrangement where somehow they were going to try to reverse the transactions by incentivizing miners. Theoretically, it might have been possible, but might not have worked. And he publicly mused over this, and he took a lot of flack for even thinking about it, because he's not really in charge of it. He really would have to, not worth going into all the details, but it would have been a long putt or even a hole-in-one to try to pull off, and there might have been damage even if it was successful. Now let's move on from Binance, and let's talk about Facebook. Now, Facebook is supposedly going to come out with a cryptocurrency, and no one's quite sure what it's going to be, but most people suspect it's going to be some type of stable coin, some type of payments coin, which would make sense. Now remember, Rakuten, we talked about this, where you have a e-commerce platform. This is a Japanese company. They have a social media platform, an e-commerce platform, a bank, and also the ability to buy, and a trading platform to buy and sell cryptocurrencies. And if you recall back then when we covered this a few months ago, I said this is the future where you'll have these companies where they'll have all your data, all your banking information. This is why it's dangerous, but they can kick you off. They can kick you off of their e-commerce platform. They can kick you off their payments platform. They can kick you out of their coin. They can kick you out of their social media platform. But again, this is where I see it heading. And Facebook looks like that's what they want to do now. They want to move into not just being a social media platform, but obviously they have a coin. They could set up e-commerce. It could be used on the platform across the platforms that they own: Instagram, WhatsApp, Facebook, and so on. Now, if you remember, in 2017, Facebook, and I think Twitter as well, they started to outlaw cryptocurrency ads. And again, this is because this was all done at the retail level. A lot of fraud. I'm not saying that Wall Street doesn't commit fraud, but it's a different type of fraud. This was mom and pop fraud. This was knuckleheads on YouTube touting ICOs. You had all these infomercials about how you can get rich on cryptocurrencies, and Facebook shut them down. As you recall, I've been saying that the large companies, I believe, were very, very envious, jealous, upset, whatever the word might be, that all this money was flowing into cryptocurrencies and they weren't getting a dime of it. Not in the trading, not in the storage, not in the promotion, none of it. It was all being done by retail people chasing it up, and they weren't making any money off. Well, now it looks like Facebook has done an about face, and they now revise their policy on blockchain ads and crypto-related materials. So it looks like you can advertise again. And I think this is part and parcel now of regularizing, or normalizing is probably the better word, but that's what regulation does. It regulates the crypto space, because now that they're trying to grab a hold of it with JP Morgan coin, with Facebook, with Fidelity Investments, with Bakkt, with RSX, with the New York Stock Exchange, with NASDAQ, with Goldman Sachs, with Paxos, with all these big names coming into the space. Well, they don't want it to seem to be at some kind of taboo or forbidden. They want to normalize it and bring it into the mainstream. Now, some crypto observers, and I don't necessarily agree with this, they're saying that the Facebook coin announcement is what lit a fire under cryptocurrencies. And that's the theory a lot of people talk about. We just talked about normalizing, regularizing, but that's also the concept of validating this space. Now, I don't know if Facebook coming in and doing a cryptocurrency validates the space. I don't think it can hurt. Now, there's some people, I think they're relatively clueless. They actually think it hurts Bitcoin, but no one who's following this closely really believes that, because a stable coin is really not a competitor to what Bitcoin is. Because if the Bitcoin people, as Charlie Munger calls them, they believe that Bitcoin is a store of value, like less of a currency, less of something to spend, but more of a store of value because of its rarity. And obviously, Facebook is not going to issue a rare coin. It's going to be something designed to use. So I suppose that's why they say there's some validation of the space. But that's one article there. That was in Forbes. And again, you see who's talking about it. It's all in the mainstream media. It's in Forbes. It's in CNN. It's in all the big media. They're not making no secret that they're now covering cryptocurrencies. In a minute, I'm going to show you what CNBC is doing. It's ridiculous pumping. But here is Bloomberg talking about it as well. There's your stalwart guy. What's his name? Joel Wyson something. I don't know. But he's also saying the same. Not he, but the guy who was interviewing Spencer Bogart was saying that that this Facebook announcement is also pushing cryptocurrencies higher. I don't know. People always try to find a reason for things to go higher. Sometimes they just do. All right, what else we got? Investment in cryptocurrencies continues. I just throw these out there, not for their significance. Just that you just see every day there's an announced another 42 million, 43 million raised in a token sale for crypto Tor alternative. That's interesting. That's the file sharing anonymous thing. Litecoin. Well, it's not going up right now. And remember, Litecoin took the big jump first a couple of months ago, back in April. Jumped ahead of, and it was kind of strange that it was Litecoin leading the charge higher, not Bitcoin, and it went all the way up to 100. And a lot of people thought that was due to the Litecoin block reward halving that's going to happen later this year. It doesn't happen. The halving doesn't happen in Bitcoin until sometime next year, almost a year later. But there was some news on Bitcoin. Litecoin, interestingly enough, is they have updated their core release now, and it essentially makes it 10 times even faster. So that is not 10 times faster. It makes the fees 10 times lower, which are already very low. So Litecoin reduces transaction fees by 10x. So that's the main use case for cryptocurrency like Litecoin, not necessarily as a store of value, but as something that can be used quickly, cheaper than Visa and no chargebacks, and that's the payment use case for Litecoin. But right now, as I mentioned, the last few days, the whole story in the crypto space has been Bitcoin. The others are not going up much at all. Now let's take a look at some of those stories on the mainstream media. So 2 days ago, you had CNBC pumping Bitcoin with a rocket there. I mean, look at that. I don't know why they have to do this. Just saying. It's up $659 this week. This is back 2 days ago at $58.96. And then today, they treat us with this, with the little train that could, I think I can, heading towards 6,000 and passing 6,000 to 6,038. I put shameless in Bitcoin pump because that's what it is. I mean, this cheerleading of Bitcoin, you don't see this for stocks, individual stocks generally, or gold or silver, or any other asset. But they clearly are pumping it. Bloomberg here showing the price going to 6,000. First time since November. Coming back, they say. There's another one here. Bitcoin skyrockets. There you go. There's CCN with the skyrocketing. I mean, it's really CNN. Fears of a melt up. Okay. The word that Bitcoin's going to melt up. It's frightening, I suppose, if it melts up. So many of these here. Here, this one from Forbes. The price goes to 6,000, clearing the way for substantial gains. Why? The price went to 6,000. Now there's clearing the way for some more gains. Well, I don't know. Well, it has. It's gone up another $180, but where will its price go next? I don't know. This type of cheering bugs me. This journalism, because when the price was going down, they were saying it was going down to zero, and now it's going up. It's to the moon. I actually think this is coordinated. I think when the price went up in the retail bubble, they had to bring it back down. Someone had to bring it back down because the big players weren't making any money off of it. They bring it back down. And now all of a sudden, you hear now that they're cheering it on, and they want to bring it back up. That's my thesis, that this is going to be a Wall Street crypto bubble here. Look at Yahoo. 3 reasons. What is this? 3 reasons Bitcoin price will sprint beyond 2019 high. Yeah, because Wall Street's going to be behind it, pumping it up, and with all the media effort there with CNN and Yahoo and Forbes and Bloomberg, and what else do we got here? We do have consensus next week. Now, that's the big... It's blockchain week already started today in New York, and part of that is consensus. Where you get 7,000 people paying close to $2,000 a ticket to go and listen to all the other, quote, movers and shakers in the crypto industry. You got the Magical Crypto Conference as well. There's like 7 or 8 conferences going on in New York City starting today. That may have something to do with it as well, the price rising, because a lot of announcements typically get made during these conference periods. What's this CoinDesk? Yeah, they're all getting excited about the $6,000 price spike, skyrocketing, and so on. Here's one in the markets. Get away from crypto now. I saw this, and this is typical of central banks. Bank of Japan's Kuroda, ETF buying aims to alleviate excessive investor pessimism on stock investment so that the stock market revitalizes and helps reflate the economy. So the economy is the value of the stocks. We see that is a classic way that central planners look at things. And then, of course, if they get involved and they buy the stocks or they buy the ETFs, well, then if there's some type of excessive investor pessimism, that'll go away because they'll see the prices rising because the Bank of Japan is buying, whether the investors know that or not. And then the stock market revitalizes and helps reflate the economy. Look, if they're out in the open, they do this with ETFs, and they do it with bond purchases in QE in the United States, and they do it with corporate bonds in the ECB, and the Swiss National Bank buys U.S. equities and unicorn stocks. I mean, why wouldn't they buy cryptocurrencies and boost them too? They like this kind of stuff. Anything you can manipulate, they are interested in doing. All right. Before we get to China, it's that time. This is a good one. Uh-oh. We got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
All right, today's moronic focuses, I think we've had him on before, Paul Krugman. Now, he has a Nobel Prize, and I'm not impressed with him, and I've said many times, not that the more I say it, the more it's true, but it's just something that I like to harp on, is smart people can say stupid things. You're not immune to saying stupid things. And then some smart people say things, so many stupid things, you start to wonder whether if they're smart at all. And that's how I think about Paul Krugman. Now, this first one here, he gets a lot of flack for. I don't give him trouble for this. You can make a prediction and it's incorrect. A lot of people criticize him for this. He said in 1998, which the internet was pretty far along then, by 2005 or so, it would become clear that the internet's impact on the economy will have been no greater than the fax machine. Well, that turned out to be wrong. Ha, you're stupid. No, that's not stupid. That's just a prediction. Intelligent person can make a prediction. It's wrong. So I don't hold that against him, but that's part of his canon of ridiculous things that he has said. Then when in 2013, no, this was 2000 and I'll try to give him in chronological order because he's got a hit parade of these types of things. So he's got the fax machine one in 1998. And then, he starts in 2013 with the Bitcoin is evil. There you go. Conscious of it, of a liberal. It's not even worth reading. It's just a bunch of dribble. Bitcoin is evil. Anything is evil to these Nobel economists because they're worried that it's going to take the ball out of their hands and they won't be able to manipulate economies if there's some extraneous thing out there that they can't control. And we saw Representative Brad Sherman today saying that Bitcoin should be eliminated and banned by Americans because we can't control it. And, that's the whole argument. So if you don't like something and it's going to take your power away, well then Bitcoin is evil according to Paul Krugman. Then when Donald Trump got elected, he said, nope, that's not the one. When Donald Trump got elected, he said, no, this is moronic because, yeah, you could make predictions, but this one wasn't reasonable at all. The day he got elected, he said, quote, "Still, I guess the people want an answer. If the question is when markets will recover, a first pass answer is never." Then he says, "Under any circumstances, putting in a responsible, ignorant man who takes all advice from all the wrong people in charge of the nation with the world's most important economy would be very bad news." All right, well, we know that the economy for the last 2 years, first of all, the markets have recovered. They were only down for about 8 hours, and then they recovered the next day. Anyway, this is the type of thing. It's more emotional than it is actually intellectual, and he's supposed to be a Nobel Prize winner. Look at this one. He went on a Twitter rant back in 2017, equating gold bugs with white supremacists. Isn't that nice? I don't know where he comes up with that one. And then he takes another crack at Bitcoin, calls it bubble, fraud, and trouble. It's the same mindless argument that if there is an item of value and it attracts fraud, that therefore the item itself or the asset itself is fraudulent or evil. No. Banks have fraud in them. Now, you could make the argument, which he's not, on biblical grounds that the love of money is the root of all evil, but that's not what they're talking about. He likes his money, he doesn't like someone else's money, and therefore someone else's money is fraudulent and evil. What else do we have in his hit parade here? The economy will never recover. Bitcoin is evil. Bitcoin is a fraud. Gold bugs are white supremacists. Economy will never recover. The fax machine article. Okay, this is the latest one. Now this one is actually the dumbest thing he said. Now it's kind of trite, but it is pretty stupid because there is a thing called the Presidential Medal of Freedom. And it's clearly given to people for a number of reasons. It's for meritorious contributions to the security or national interest of the U.S., or to world peace, or to cultural or other significant public or private endeavors. And there's been many high-profile winners of this this award. Walt Disney won one under Lyndon Johnson. Ronald Reagan gave Audrey Hepburn one. Bill Clinton gave Lou Wasserman one. George W. Bush gave Charlton Heston one. Obama gave Meryl Streep one. Steven Spielberg, Robert Redford, Robert De Niro, Tom Hanks, Cicely Tyson. Obama gave out the most Freedom Awards, but that's what they are. So there's many of them are given out in the movies and theater. Obama gave them out for dance, architecture. He gave one out for. These are just honors that are given. Reagan gave out for music. Vladimir Horowitz is a Russian pianist. Frank Sinatra got one from Reagan. Count Basie. American icons are just generally people who achieve fame in their fields. Obama gave one to Springsteen, Diana Ross, James Taylor, Barbra Streisand. He went nuts. He gave out a lot. Trump gave out one to Elvis Presley for music. But you get the point. They're from a variety of different areas. But here's what our friend, emotional Paul Krugman, has to say when he finds out that Donald Trump gave one to gave one to Tiger Woods. Now, Tiger Woods is clearly within the type of person who would get one of these presidential medals of freedom. It's a culture or significant public or private endeavor. He clearly, coming back and winning whatever the they do in golf, the Masters or whatever it was. It's a big deal. He used to be a big deal as a golf pro, and now he is a big deal. I mean, he's up there with other sports legends, and that's just how it works. And so he got one, but of course Paul Krugman decides that if Donald Trump wants to give someone something, well, that's not a good thing. And he goes in this diatribe. I'm old enough to remember when presidential medals of freedom were given for showing courage and making sacrifices on behalf of the nation and for the world. Tiger Woods hits golf balls for money. Yeah. Oh, I mean, means he doesn't understand that the presidential freedom medal is for here. Barack Obama gave one to Charles Sifford for golf. He gave one for baseball to Yogi Berra. Oh, Yogi Berra just hits baseballs. Willie Mays got one. Kareem Abdul-Jabbar got one from Obama. Michael Jordan. I mean, well, I don't know what he's talking about, but there it is. Paul Krugman, whenever he gets a chance to say something, put his foot in his mouth, he seems to do. And I wonder, does he even have any influence whatsoever in the economy? Because I don't think he advises anybody. He's not part of any political campaign. I mean, he's not advising one of the Democrat candidates. So I don't know what he does with his days. Does he just write articles in the New York Times predicting stuff? Or all right, let's talk about China. China. Well, first of all, we've been talking about China for the longest time, and one of the things I've talked about with China is that, and I'm going to stop doing this because I realize that one of my complaints about alternative media is a lot of what they do, besides make up their own foolish narratives, is they're always responding to what they view are dumb narratives from the mainstream media. Well, one of the dumb narratives of the alternative media has been for the last few years that China's going to crush the dollar, gold, back yuan, game changer. You know that whole story that China's great, Sun Tzu, they've got gold and they know what's going on. The United States doesn't. The United States is just a debt-ridden country and China is some golden paradise. And, of course, ignoring the financial issues that China has. China has many debt issues. In fact, they probably have more than the United States. But it's not because they have any love for China or even understanding of Chinese culture, Chinese anything. It's just because they attach them to gold, and so therefore they're golden. That's all they want to hear. That is all I need to know. China is buying gold. China is smart. Throw in a little Sun Tzu, and next thing you know, China's great, and the United States is terrible because Americans are morons because they don't buy gold. Chinese are great because they do buy gold, and anything they do or anything the government of China does that is wrong doesn't matter because China is good because it likes gold. They're going to crush the dollar, and my gold holding is going to go higher. That's the typical. And I've decided not even to respond to that anymore, and really just to talk about what's going on in China, and then we're going to get to how this impacts what's going on with the trade deals. A lot of people, they try to say, well, China's got gold. That has nothing to do with. We're not going to talk about gold. I'll talk about it for the last time right now with respect to where it matters. They bought 13 tons of gold for the People's Bank of China in April. Okay? Now we're done with gold. The rest of what we're going to talk about with China has got nothing to do with gold. All right. So, China. A while back, we were talking about how China's debt is too large to hide. They've got plenty of debt, and the reason they have a lot of debt is that's how they drive their economy. And a lot of that debt is bad debt. It's government-issued debt, and most of it's issued in dollars because they don't have a free-floating currency because the yuan, they subject to capital controls. They try to peg it to the dollar. It's not a desired currency, and nor does China really want it to be a desired currency. They may want internationalization of the yuan, but they also like the control of being able to devalue the yuan if they have to print as much as they want, to put capital controls on. And so the way China has driven its GDP is the classic Ponzi scheme, and it's no different than what the U.S. did in QE and so on, and the ECB when it does its quantitative easing. And if this isn't a specific Chinese problem, it's just that China's done it more, And so the miracle of what China has done is it created more debt than all the other central banks combined in the last 10 years, and it really shows. However, as anyone knows, when you start out, when you borrow a lot of money to create economic activity, you do get a boom. But there does come a point where you start to get diminishing returns, you reach the Minsky moment, and there's actually diminishing return, and now you've built so much stuff and you've brought all that demand forward that really won't exist for another 10 or 15 years, but you spent it now and you borrowed now to build stuff that you don't need, which a lot of also people like, oh, that's good because then they're going to grow into it. No, they're not. Whenever you build something far in excess of what you overcapacity, like we saw with all those bicycles that they had, that's just a waste of money. And remember, it's not stuff you're going to use, because anytime you build a building on debt, the only way you pay the debt back is people move into them. If they don't move into them, then they can't pay rent, and then you can't get the money back. So now you have bad loans. Oh, well, you still have a building. Yeah, but then the building needs to maintain. How's the building going to be maintained if there's no revenue coming in from any tenants? They don't think about this. They just, because they have this mindset that China is good, so if they do this, it must be a good thing because, by the way, they buy gold. Okay, so what's going on, and it's obvious here, is China's defaults hit record in 2018. You can see what happens over time. The loans aren't due the first year. Eventually catches up to you. Well, now they're saying they're on pace, triple the pace of last year. The problem with China is it is a debt Ponzi scheme, and they know it. The People's Bank of China former head said over a year and a half ago, we got to stop and we have to move towards a service economy. We can't be relying on debt. It may already be too late to try to start this process. And then the U.S. hit them with tariffs. So their response to tariffs is, well, we got to keep the economy stimulated. We'll just give the companies that are exporters tax breaks. We'll loan them more money. We'll extend loans. We'll forgive loans. It's a mess. And that's why we are seeing here, I'm going to show how this ties into the negotiations. Now, a lot of people say, well, China owes its money to itself. Well, yes and no. Debt is debt, but a lot of that debt is issued in dollars. And yes, they don't have a lot of external debt, but the external debt that they do have is issued in dollars. So China issues $2 billion in dollar-denominated bonds. This is back in October 2017, when all these knuckleheads are talking about gold, back yuan, and game changer, and China to crush the dollar, and end of dollar hegemony, and all the nonsense you kept hearing. But that's not the reality. The reality is that China runs on dollars. You've heard the concept of the euro dollar. It's all the dollars outside of the United States, not just in Europe. And China's got a lot of dollar-denominated debt from its state-owned enterprises, its state-owned banks. And the reason they issued this particular bond, not because China needed $2 billion, was they were trying to get a lower rate, because this would be a benchmark for their state-owned banks that issued dollar-denominated debt. It's the only reason they did it, because they need more. That's how they run their economy. They have to issue debt. All right, so Chinese defaults here. There's another story in Bloomberg mentioning the same thing. Crushes the dollar. This year shaping up to be the biggest by far for defaults in China's $13 trillion bond marketing, highlighting the widening fallout from the governments, whatever it says after that. Now, China's need for dollar. Pointed out, Bloomberg. The dollar dictates China's need for a trade deal. Bingo star. Says, quote, don't underestimate the dollar's role in keeping China at the negotiating table in Washington. Remember, China to crush the dollar. They're de-dollarizing. BRICS have had it. Gold, back yuan, my Belt and Road. End of dollar hegemony, game over. No, not even close. They are dependent upon the dollar. Now, do they not want to be part of the dollar? Sure. Does a person who's in prison not want to be in prison? The question is, can they do something about it? And can they do something about it tonight? No, they can't. Their economy runs on dollars, and they need them. Otherwise, they're going to end up in some type of inflationary spiral. They're going to have a lot of defaults, and they need a trade deal. Now, the U.S. needs a trade deal too, because we can have big inflation if they start putting tariffs on consumer goods, the prices go higher. But let's hear what Trump had to say last night. It's very interesting because now he did this on purpose because he knows from the Chinese perspective, if he says something publicly, then he has at least a negotiating stance where they know from their perspective you have to save face. You can't go and tell a crowd of people in Panama City Beach, Florida, and not stand by it. So here's what he said last night.
So I just announced it will increase tariffs on China, and we won't back down until China stops cheating.
So he just said to the crowd, and we won't back down. So now China knows that he's told his, quote, base, the people that he's counting on to get him reelected, that we will not back down. Listen to what else he says, and this is for China's consumption.
Our workers and stealing our jobs, and that's what's going to happen. Otherwise, we don't have to do business with them.
Otherwise, we don't have to do business with them. Now, yeah, I guess you don't have to. But that is a frightening prospect for China because like 20-25% of their economy is based on shipping stuff out to the United States. The social turmoil they would have what would those people do if those plants closed down? People don't, I haven't been to China, but I understand that 300, 400 million people moved in the last 20 years from the middle of nowhere into these big, massive cities. Some of them you never heard of, and they're bigger than most U.S. cities. They've got like 18 or 19 mega cities that they've built, and, they had Tiananmen Square. They don't need that again. China doesn't need social unrest. They're not going to be able to tell people, hey, be patriotic Chinese and support us. That only goes so far. It's very hard to rally people to your side when they don't have a job. You can make a demon out of the U.S., but I don't know if that's going to help them. But let's listen to what Trump said, and then we're going to get into the lay of the land right now.
We don't have to do business. We can make the product right here if we have to.
If we have to, we can make the product here. Now, he's not incorrect in that. It is not impossible or out of the realm that the United States could make refrigerators, could make cars, could make gadgets, could make Smaulgld mugs, could make a lot of stuff. None of this stuff is impossible to make. And you say, well, we don't have the industrial capacity anymore to make it. Well, we've seen China didn't have it 25 years ago either. It doesn't take long, especially if the government is pushing it. To look what happens in world wars. Just look at World War II. United States did not have a big industrial capacity to make munitions. The United States got attacked on December 7th, I believe, 1941, Pearl Harbor. Within a year, they were rolling out tanks and that's back then. 80 years ago, industrial capacity was able to be brought online relatively quickly. The Third Reich did the same thing. They got their munitions in place in a couple of years, and they were churning out all types of weapons of mass destruction. So it's the same with manufacturing. If the United States had to, and there was part of some infrastructure plan or some build it at the United States. Now, we've never, this is not, countries that do that are generally either under wartime or they're under much more totalitarian style or top-down centrally planned economies like China, Nazi Germany. And I'm not equating the two. I'm just saying when you have the government dictating the means of production, it can happen much faster probably than in the private sector. So if the United States had to, and it was a national security interest, they had to build munitions, they had to build refrigerators, wherever it is, they can do it. It's not like it's something it's impossible to be done. Now, is it impractical? Probably. But Trump is actually saying, it's like a threat. Like he just said, we don't have to do business with China. And that is a true statement. But in reality is we somewhat do.
We used to. Remember? Like we used to.
Yeah, like we used to make stuff. This is his old nostalgia here.
The era of economic surrender is over. The last administration also signed a disastrous trade deal with South Korea.
He's doing the same with South Korea as well. So that is where Trump is publicly signaling to China that we don't have to do business with you. We're going to put the tariffs on. Let's get a deal done. It's a very hard line. Now put that against the backdrop of China's need to keep the wheels on its economy for social stability. No matter how much social credit scores they have in surveillance, things can get out of hand. And they don't need that. They want to continue to grow. They know that it's already hard based on the fact that they've overbuilt and brought demand forward. But they think that they can, if they can get a good trade deal back and keep the monies that they were expecting from the United States, then they can maybe work out their, they have central planners. They're very smart. They think they can figure it out. But they had not planned on these tariffs. And this makes their job a lot harder. All right, so here's what's happened so far. So China, according to Trump and according to the schedule, said, well, that's it. We're not coming. And then Trump said, all right, well, Friday night or Thursday night, Friday morning, you got tariffs. And then they said, okay, we're coming. So supposedly they're meeting right around now. First they were saying they weren't coming. Now they're saying they are coming. And the latest here is, that was Trump then said, okay, well then he files a notice to raise the tariffs on China. So it looks like, Trump may blink, but so far he signaled very strongly, hey, if we don't get a deal here, we don't have to do business with you. We'll just start making widgets ourselves. I'm not sure how practical that is, but the damage to China, I believe, would be much more significant. Would not be good for the a trade war where basically countries were operating. It may not have been advantageous as much as the United States wanted or as much as China wanted, but where goods were flowing, maybe the U.S. wasn't getting to export as much, and maybe there weren't enough tariffs, or from Trump's perspective, on Chinese products coming in. But that was the status quo, and the economies were both growing. When you have a trade war, it's possible you have two losers. That China's economy slows, and then U.S. goods become more expensive. And then China says, well, if you're going to tariff our goods, well, we're going to raise them on yours, and then trade comes down to a crawl. That's why the stock market goes down, because they're worried the impact of a trade war would be a global slowdown. Now, where it all ends up at the end, I don't know. But let's see what you guys are saying in the comments. If you're talking amongst yourselves or what you think. And, all right, let's see what we've got. If you want your comment called out, put SMAULGLD. If you write Hey Lewis, I may not see it. And if your comment catches my eye, we can discuss your comment of a question. All right. Phil McCain is here. Jeff Gotts and Carl Joseph DiMarco. Ken Singsta is here. Howdy, folks, says the Daily Coin. That's Rory. Howdy, folks. All right. Who else do we got? Silver Stacker for Life. Yeah, I saw Silver Stacker mentioned something that I saw. Salivate Metal, but I didn't see it. He did a video saying that some mine in Mexico closed, large mine. I did not get the details on that before I came on. I'll take a look at that, though. But thanks for bringing that to my attention. I'll check out his video. All right. DB Stupid is here. AUAG. Hey, greetings from Scandinavia. Dette bra. Dette mycket bra. Jag kan inte prata svenska. All right. Carl Joseph DeMarco. Finally got my mom to listen to Smaulgld for the first time. Maybe she'll buy a mug in the end. Tell her it's a game changer. Silver Stacker. Bernie. Why are you guys talking about Bernie? We didn't even mention Bernie. Did I mention Bernie earlier? Well, now that you mention it.
Donald Trump doesn't understand what it's like to live in China or Russia, or I don't know what it's like to live in China, but I know that Donald Trump, well, that's all I got to say.
All right. Thank you, Bernie. Jeffrey Gotts. I wish they were still negative on Bitcoin. Yes. All right, I don't have any comments here yet. Here we go. Tossing Molotovs. Smaulgld, didn't this rise start when some guy bought 200 million on 3 exchanges instead of the OTC like any other whale? That was a few weeks ago, I believe. Yes. And when people buy on the OTC, so people maybe don't follow this, when you buy what's called on the OTC, it's a negotiated transaction. In the case of Bitcoin, it may be directly from a miner and you just negotiate the price, and it doesn't have any impact on the other prices. Because if people knew that you were buying that amount, price would rise if you put in those types of bids. Now, why would somebody buy 200 million on 3 exchanges instead of the OTC like any other whale? Well, the answer is, I believe, that remember if the price was low, the miners may not have been mining that much. Or there may have been a demand from all these institutions or loading up for whatever reason to get their platform started. Either the miners didn't have it, or, well, either way they wouldn't have it. They wouldn't have it because they're mining less, coupled with the fact that not only were they mining less, but that there may have been increased institutional interest. And once that got to the point where there wasn't any more Bitcoin to buy on the OTC, at least not 200 million, they had to go to the exchanges. So that's possible. I don't know. But it's definitely big money. All right. Carl Joseph DeMarco. Plus, the companies have a lot of overhead supporting party committees and forced into bad business decisions by party committees they have to support. By the way, Carl Joseph DeMarco, I think he lived there 10 years. I think he ran a business there. And he's since come back the last couple of years with his wife, who I believe is from China. All right, tossing Molotovs. Smaulgld, is there a relationship between an irresponsible government and their citizens buying gold? Well, let's go through a few of them. Now, would you say China is an irresponsible government? I don't think so. The Chinese don't buy gold because they think their government is irresponsible. In fact, I think they buy it because the Chinese want them to buy it. They want there to be more gold in the country. And in fact, in a communist country, technically, they can call that in, just like in the United States they called it in. They can nationalize that gold. So I don't know if that's always the case. It could be. The United States has an irresponsible government, right? With the debt and the deficit doesn't drive gold sales. People say Indians buy gold because they don't trust their government, but I think that there's more of a history there as well. They've had many different governments over the last 5,000 years. So the gold has got a significance in culture, less than as an anti-government thing. And also, like I mentioned with China, I don't think they buy gold because they think their government's irresponsible. They get arrested if they thought that. But I think it's because the economic circumstances in China are such that they have money, so they can buy stuff like gold. A lot of people don't understand that gold's number one demand is jewelry, and you got to have money to buy jewelry, especially gold jewelry, maybe not silver jewelry. That's why nouveau riche and rappers, they get gold, big chains, and so I don't know. I'm sure there are people who definitely buy gold because they're worried that their government is irresponsible. Clearly, like in Argentina, I would imagine if they had any money, they would buy gold because they know historically the last 40 years, the Argentine government is just is a disaster, and it always leads to inflation. But I think there's also people who buy gold because they can afford it. And in a way, you could say it's because they do trust the Chinese government, the people in China, because it's given them the wealth to buy stuff and to buy gold. And anyway, let me see what else I have here in the questions. But I do want to show. Let me see. Life here. Well, I'll show you that, but that's not what I wanted to show you. No, that's the wrong way. Get rid of that. Discard. All right, let's see what else we got in the comments. Look at those mugs upside down. That's not good. Got to change that. What I wanted to show you was mug life. Now I can't find it. I should be more prepared when I do these shows. Here's mug life. Mountain house. I'm sure it's worth the wait. There it is. The reason I wanted to show that is because of the gold chains. And there you go. There's the Smaulgld travel mug. Classic cognac. I think it's a Ferrari, not a Lambo there, but mug life. All right. What else? Carl Joseph DeMarco. Chinese don't buy much gold. They prefer shadow banking products with high returns, most of which are cell phones. Okay, the big gold numbers coming out of China are probably institutional. But didn't you once tell me, Carl, that when Chinese buy gold, they're not buying like bullion, like stacks of gold. They buy gold objects. Like they got some money, they might buy like some special commemorative coin with a high markup or some type of gold statue or trinket. Let me know if that's the case. I think I recall having that conversation with you, and he was there for 15 years. Yes, that was the point. All right. Well, I think we're done here. We've reached the end of the comments. So unless anyone has any further comments, Bernie's going to give you the 10-second countdown.
10? Well, hold on. Is that fair to everybody to just give them 10 seconds? Because if they're here, then maybe they want to stay all night and it should be free.
No, Bernie, we're just going to just 10 seconds.
All right. 10. You don't want me to talk about the Franklin half dollars?
No. You didn't sell any Franklin half dollars.
Okay. 10. What about the Mercury dimes?
No.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1%. Have a good night.